January's employment snapshot, a picture of stagnation and persistent pressure. The UK labour market reveals a complex picture in January, marked by a surprising standstill in unemployment figures juxtaposed against stubbornly high wage growth and lingering economic uncertainties. While the unemployment rate held steady, a closer examination reveals a 6-month upward trend, painting a less optimistic portrait of the overall employment landscape. This stagnation, coupled with persistent inflationary pressures, continues to place significant pressure on the Bank of England as it prepares to announce its crucial interest rate decision today. Wage growth remains a double-edged sword, asterisk. Official data reveals that pay growth remained robust at 5.8% in the 3 months leading up to January, a figure that aligns with city economists' predictions. While this might seem positive, factoring in inflation paints a different picture. After adjusting for the quarter's inflation, real wage growth sits at a meager 3.1%, a stark reminder of the ongoing cost-of-living crisis squeezing household budgets across the nation. This persistent wage inflation fuels the Bank of England's dilemma, maintaining higher interest rates to combat inflation risks, stifling economic growth, and potentially exacerbating unemployment, while lowering rates risks further fueling inflation. Data challenges and the ongoing impact of the pandemic, asterisk. The Office for National Statistics, ONS, acknowledges ongoing challenges in compiling its employment survey. The lingering impact of the pandemic, evidenced by a significant drop in survey participation, continues to complicate the accurate measurement of employment trends. This data acquisition hurdle underscores the inherent complexities in interpreting the current economic situation and highlights the need for caution when drawing definitive conclusions from the available figures. The accuracy and comprehensiveness of the data remain paramount for informed policy decisions. Glimmers of hope amidst the uncertainty, asterisk. Despite the broader challenges, certain sectors show signs of recovery. The Recruitment and Employment Confederation's Labor Market Tracker reveals a positive trend in job advertisements, particularly within sectors that have experienced difficulties over the past year. The IT services and construction industries, for example, are showing renewed hiring activity, suggesting a potential shift towards stabilization in specific market segments. This resurgence, however, needs to be viewed within the larger context of broader economic anxieties. A separate survey conducted by the Manpower Group Recruitment Agency further supports this nuanced perspective. While concerns remain regarding declining business confidence ahead of upcoming tax increases, the demand for workers appears to have stabilized. This tentative stabilization could be attributed to several factors, including pent-up demand and the continued resilience of certain sectors. However, the underlying apprehension regarding the economic outlook warrants close monitoring. The looming impact of fiscal policy changes, asterisk. The impending increase in employer national insurance contributions, expected to generate £25 billion for the Treasury, presents another layer of complexity to the economic landscape. This significant fiscal adjustment is poised to impact businesses, potentially affecting hiring decisions and investment strategies. The concurrent rise in the national minimum wage for over 21s, a 6.7% increase to £12.21 per hour, adds another element of uncertainty to the equation. While intended to improve the living standards of low-income workers, this increase could further strain businesses already navigating challenging economic conditions. Asterisk looking ahead, a complex and unpredictable future, asterisk. The January employment figures offer a mixed bag, a snapshot of a labor market grappling with both resilience and uncertainty. While the unemployment rate stability might seem reassuring, the underlying upward trend over the past 6 months, combined with persistent wage inflation and upcoming fiscal changes, presents a considerable challenge. The Bank of England's interest rate decision today will be a critical moment, reflecting its assessment of this multifaceted situation and its strategies for navigating the precarious balance between inflation control and economic growth. The coming months will be crucial in determining whether the current stabilization is a harbinger of genuine recovery or merely a temporary reprieve before further economic headwinds emerge. The ongoing challenges in data collection, coupled with the complex interplay of fiscal and monetary policy, necessitate a cautious and nuanced interpretation of the current labor market dynamics. The road ahead remains uncertain, requiring close monitoring and adaptive strategies to effectively manage the evolving economic landscape.